One other question I also get asked quite a lot from clients is around deposit funds. And I always make clear to my clients, especially when I'm introducing them to Thomas Legal, is that the process of quantifying where the funds have come from and documenting that is fairly, and I use the word carefully, but intrusive in a good way, in the sense that it's there to protect everyone, to understand where the funds come from, to document that. That confirms things from the lender and obviously from a legal and a law point of view. Um, why is it so in depth with regards to evidencing deposit funds? Is it just as simple as here's a bank statement, there you go? Any more questions, please? Or do you have to do additional checks in the background? Or how do you overcome the evidencing of deposit funds?
Yeah, I think it's important for clients to understand that the estate agent, the mortgage broker, and the lawyer are regulated by three different bodies. We've got the FCA, the SRA, the CLC in our world. Actually, we've got two regulators, and the estate agent authority. So we all need different things. We all need to satisfy different requirements for our regulator. So when you go to purchase a property, the estate agent will say, we need to see proof of your deposit, and you will give them a bank statement that shows you've got £60,000 in HSBC, and that's plenty. They then telephone me and say, oh, don't worry, done the source of funds, it's fine. Done it for the estate agent. Well, our situation is very different. So yes, we need to know source of funds. So we need to see where the money is right now. That's important, but it's not as important as source of wealth. So our responsibility as lawyers is to establish where the money has come from and whether the money has come from a legitimate source. And it's the source of the wealth which can seem quite intrusive. So we got lots of experience with international clients and complex funding situations, just because of the amount of transactions we've done over the years with various clients. But we need to work it back and work it back and work it back until we can find out that that money came from that place. So if you sold an asset, that's really quite an easy process. Because if you sold a house, a car, a boat, whatever it is, Bitcoin, we can find out. You will have a statement to say, this is what I've sold and this is how much money I've got for it. And then we should be able to say, you put it in the high interest account for 6 months and now you're buying the property with it. Really easy. When it's come from income, that is more of a experience point of view, I think, for the lawyers. Those that have done it for many years can get a good feel for this very quickly. Those that are newer maybe will take a bit more time. But in short, what they will probably ask for is, let me see your pay slips and let me see your bank statements. And if you're spending more than you earn and you tell us you've saved £100,000 in 2 years, that's probably not true. If we can see there's a huge surplus there every month and you tell us you saved 100,000 in 2 years, and could that work theoretically? We're not going to ask for 2 years worth of bank statements, but theoretically, could you have done that? If the answer is yes, fine. We'll take a view and we'll go with it. If you are in retirement age and it's your life savings, again, we're not going to ask for 30 years worth of bank statements, but what you're telling us seems right. And if we ask for a sample, it looks right. So that's really about the long and short of it. When we are receiving gifted money, the situation is no different. We need to identify the person gifting the money. So really, all the money going into the transaction needs to be verified. Deposit, stamp duty, everything. So we've got your deposit as a client. We verified that. That's fine. You're also getting some money off mum. Where's mum got their money from? So that's the bit that can seem really intrusive. And I tell every client that right at the beginning. Firstly, it's going to seem intrusive. Secondly, it's going to take some time. As long as everybody's aware that's going to happen, it needs to happen, it doesn't matter which law firm you go to, it's still going to happen, then I think we just need to get on with it and do it. And that's the understand, it's the educational piece that needs to come out at the beginning.
Yeah, I think that's something I've picked up with clients as well when they're saying, my mum or my nan or my grandparents or whoever is going to give me funds. It's, just so you're aware, you're going to need to go through this process. They are going to need to evidence it. And especially sometimes with the older generation, and rightfully so to a certain degree, well, it's my money. Well, why do I need to prove who, where it's come from,
Yeah.
and who are you? And but actually, it's well, no, it's we're not trying to be nosy. We're trying to establish where the funds have come from clearly for all the obvious reasons to make sure that it's legitimate and safe to be used for a transaction. And it's as much as your client, but also any gifter involved, making sure they're familiar with this is normal. This is just a process we're going to go through. Let's not resist it. Let's just work through it, and it makes we tick those boxes a lot quicker than if we start resisting or getting annoyed about it.
Yeah, yeah, absolutely, absolutely. I think cooperation is key, isn't it?
Mm.
If we got a client who is receiving gifted money from their parents, if the client can help with the gathering of information, I think that does help speed things up dramatically.
And if you've got a client who's because a lot of again London clients I think of often have family abroad who give funds,
Mm.
and obviously that's something we have to pick up with the lender, and depending on the country it comes from, there are potential additional requirements. From your side, are there any additional considerations you're thinking of when funds are coming from overseas? Will you need to have documents translated? Is that something that you can help with, or there's a firm you can put them in touch with that can help with that type of thing?
Yeah, the translation piece is obviously essential. So we we need we need to be able to interpret the documents in the correct way. As a firm, we are really familiar with lots of countries around the world, so we're quite comfortable with it. But there'll be a lot of firms out there that may be dealing with a gift from a country that they haven't dealt with before, and that then can take some time. So again, it's about the client asking the right questions at the beginning. When they're choosing the lawyer to partner with, they need to be choosing the right one for them. And gifted deposit is really important because there are some cultural differences as well at different points throughout the world. Um, Tax is an important thing.
Mm.
So we sort of, as lawyers, need to understand that the money is legitimate. If the money has been acquired and tax hasn't been paid on it, then it's not legitimate money. So we might also need to check that the funds that they have has been correctly taxed. And there are rules as well from different countries, restrictions. And China is a great one. So the Chinese authorities need to authorize any money coming out of the country. It's about 50,000 coming into the UK. And the condition they put around a lot of that is we will authorize the money, but we won't do it to buy real estate.
Interesting.
So that we see lots of that. So it's understanding different rules and regulations from different jurisdictions as well.
Yeah, and I think you make a good point there just about tax on a slight tangent. It's if someone has got a classic one is stocks and shares. Now, obviously, they're in an ISA, and obviously, we're not giving financial advice here. But if it's in a stocks and shares ISA, typically, then there's no tax implication there. But if you've got shares outside of that and you're selling them, then there can be a tax implication, and actually, it's a realization of, oh, I've got £100,000 worth of shares. That's my deposit. Well, that's the gross figure. Is there any tax on that? Is there CGT on that? Is there anything else potentially payable? And it's obviously maybe that's a question that you would raise with the client, but also from the client's point of view, when you're coming to the table, ultimately your deposit is the net, the cash figure, obviously not physically cash, but the number needs to be having covered off any tax implications and charges. And again, if you're exiting your savings early from a savings account, there could be an early repayment penalty for doing so. So it's making sure that net figure after all those deductions is the number you actually need to make the transaction work. Otherwise, you can end up short very quickly.
Yeah, so true. And I guess the other thing, whilst we're on the subject of deposits, I get lots of questions around what if I need to pay my mum back? And we will get the client to sign the letter to say that the money is a gift, not a loan. If it is a loan, then we need to tell the mortgage lender. And the mortgage lender might not be comfortable with the fact that you're getting more funding than perhaps initially said. So if you are getting a gift for 25% and a mortgage for 75%, but that gift is not a gift anymore, it's a loan, suddenly you've got 100% funding for that property purchase, and we need to tell the lender. The other question I get quite a lot is, can I use credit card funds for my deposit or part of it, or to pay the stamp duty? Again, something we need to tell the lender.
Yeah, definitely. And I think when we're looking at deposit funds and gifts, there are some lenders who can who are comfortable and can get their head around it being effectively a loan and even potentially a charge on the property, and even potentially monthly payments paid back to mum and dad for it. That's more the exception than the norm. The norm and the majority is needs to be a one-way ticket with the funds, because the idea is if they're giving you 25,000, you've then got to pay them back 1,000, a month back. Then all you're doing is putting yourself in a position where you've got a commitment, which is not ideal.
Yeah, exactly.
Because lenders are looking at those outgoings and ingoings, and if you're suddenly committing to paying your mum and dad back £1,000, ultimately a lender is just going to count it almost like a car loan. It's like, well, that's another £1,000 going out, and that will normally, kill the affordability in most cases.
Yeah, very true.
Thank you, Chris, for that.
Okay.
Thanks for watching. And if you have any questions, please ask below and hit subscribe below so you don't miss out on our next episode.